Hey guys, welcome back to the channel. So today I'm going to talk about Fubo stock. I had initially shared my thesis back in September in this long thread that you can see here. I'll link it in the description if you're still interested. Some of the things that I shared played out. I had expected them to win the court case. It didn't actually they didn't actually end up going to court because they ended up settling the lawsuit out of court with Disney, and the venue sports thing that was going to be launched is cancelled now. So it played out. I had talked to a couple lawyer friends of mine, and based on what I had read and everything else, these are all the quotes that I found really interesting in the press in the briefing from the court. I think it was like a 80-page document that I went through and kind of shared my understanding of the documents and how I saw it playing out. And yeah, I really liked the setup at that point. I thought it was an asymmetric bet. Now after this merger, after the company is now starting to see more traction, the numbers came out which were actually really good. And I do believe 2026 is going to be a great year for Fubo because of the FIFA World Cup. They generally do really well during FIFA World Cup. It's Fubo, right? So it's mostly basically football. So they have a huge customer base which has a subscription for football. Obviously with Hulu coming in, there's going to be more people who are using the the service for different things. But the Soccer World Cup is definitely going to be a huge beneficiary, just like Olympics or like huge events like that end up helping them out. So the numbers were great. I had tweeted about it actually right after the numbers came out, and I had said that this stock should do well here. So yeah, I had shared on July 29th. That was yesterday. Decent set of preliminary numbers from Fubo. Looking forward to listening to the earnings call. Could move higher in going into the earnings call. So it was pretty easy to trade at that point because the numbers were really good. And I mean, this company is trading based off a merger up. But if the merger itself is gonna go through and you have the revenue inflecting for Fubo itself, like that's really really good to see, right? So it felt like a pretty decent risk reward going into the earnings. And here, this is my X. I'll link this as well in the description if you're interested. I do share trades all the time, and I do share thoughts about what I'm seeing in the market. If I see something interesting, and if you're interested in something, please go ahead and give me a follow. I think it'll be well worth it. So yeah, so let's look at the Fubo presentation. I guess most of the people who are watching this video are already well versed with what's going on here. Again, I am someone who is not in this stock for the cult of it. I know there's a very strong cult following, and probably a lot of the people that are watching this video right now are one of those people. So I'm not here to demean the stock or say that I'm very smart and I could be right. I could be totally wrong. It's very hard to value this company, because there's so many different things, and the competitors have valuations all over the board, and there's no real perfect competitor. You can say Netflix, but not really, right? Because Netflix has been there for so long. Their revenue growth has been substantial. They're profitable, and they have such a huge IP, right? So because with Fubo and Hulu, they don't really have their own IP that they can use, no own library they can use. They're kind of using the rights. So the biggest thing I think for Fubo and Hulu together, the Newco, the biggest thing that I think when I had initially shared my thesis also was if they win this case. Now a lot of people that are subscribers of Fubo, just the customers themselves, they think that Fubo keeps on increasing prices, and Fubo is the reason why they're not they have to pay so much for all these rights and everything. Meanwhile, Venue was coming in and they were going to undercut everybody and charge a really small amount. The reason why Fubo charges so much money is because the amount that they have to pay to the likes of Disney and Fox and everybody else for the rights that they pay to broadcast all those sports was substantially higher. And what Disney and all these other conglomerates did, the bigger companies did to Fubo, was they were forcing the prices higher than Fubo, and Fubo didn't have any choice with what they can choose in terms of so there's something called bundling. And bundling, what happens is, say Fubo goes to Disney and says, I need these 10 channels and I don't need your 90 other channels. What Disney is going to do to them is, they know that Fubo only needs 10 channels. They don't need the other 90. What they do is they force them to buy the 90. So say the package that Fubo wants to buy for those 10, they would just want to pay per channel basically. For 10 channels, they want to pay say $10,000. What Disney is going to say is, hey, you don't get those 10 channels until you buy these 90 other channels, and you have to pay $20,000 for it. Now Fubo, which can only make money from those 10 channels, has to pay X amount for those other 90 channels that they don't even need. But now they have this extra cost, that extra fixed cost that they have to deal with. Now they're kind of forced to increase prices. So this is what is happening every time. And then sometimes the carriers would just drop them because they were kind of concerned that Fubo is a great operator. They're able to, people can argue that they're not a great operator because they've never made a profit, but also it's not an easy business, right? And especially if these big conglomerates that you're trying to battle with, they're trying to, just bog you down. And David Gessler has done a great job by getting this company here, especially like having the first positive EBITDA quarter, right? So going into this merger, it's looking really good for them. But yeah, like I think like just for the principle of it, just for the principle of following Fubo, that was a pretty big thing for me, just as an investor as well. That seeing that how David Gensler was like basically trying his best to make this business viable, also trying to take down all these bigger conglomerates and like fighting against all this monopoly businesses that were kind of operating in this environment. And all the subscribers just like us who have to pay for these services have to pay 2-3 times more than what they're actually worth. So this new merger allows Fubo to reduce prices, which is, I believe from my conversation with subscribers, is the biggest barrier for them to gain more subscribers. A lot of the people who are subscribed to the platform, their biggest problem is that it's expensive. So if they deal with Disney directly, if they deal with Fox directly, because now with the package they'll be able to package the deals better. They can price it better as well. They'll have more. Basically, Disney is going to be their parent, quote unquote, and the parent is not going to try to take advantage of Fubo, because I mean it's their subsidiary, right? So what that will allow them to do is they can choose what they want to broadcast on these on the subscription on the subscription platform, which will allow the costs to come down significantly. That is the huge reason why you'll see here the EBITDA guide for the company. They're saying the revenue is going to grow a little bit, but the EBITDA is going to expand massively, right? And the share of this like them to combine is going to be 6.2%, which is pretty decent. Like they'll be a pretty big player here, and with all the cord cutting and stuff, like all the dish like DirecTV and Dish-Link and everything, you can kind of expect them to continue to reduce market share, and Fubo and Hulu should continue to grow at a very significant pace as we go forward, right? So that's something really interesting to see, and I do believe that it'll play out over the next 3 to 4 years, where we'll see hopefully prices coming down for the for the subscribers. And I'm sure pricing coming down will actually be a huge incentive for people who want to watch college sports, who want to do all these things. They can actually enjoy more of these, enjoy more sports for a cheaper price. Great for Fubo's profitability, because this was the biggest reason they had to keep on increasing prices. Churn goes up. People don't want to pay 10% higher every year, but the 10% was not going to Fubo's bottom line. It was basically going to Disney and Fox and all these bigger conglomerates who were just like trying to get Fubo bankrupted. It's just my opinion. They were trying to get them bankrupted, so they didn't really survive in this whole thing. So it was nice to see them win this case, get all the money from Hulu. And at that point, I had said this company is at a point where either this goes to zero, which was very unlikely, just given the fact that they've been able to fight all this competition for the last 3-4 years. They were able to get to that point. They were able to do a deal with them, get venue, basically floor, like venue's not going to happen anymore, and they're going to be great. So let's look at the valuation real quick. Sorry for the long blabbering, because I mean it's a little, I don't get too emotional about things when I'm investing, but this was one thing that was kind of interesting to see. And the price gouging and everything else that was going on by conglomerates, it was kind of interesting to see how Fubo actually fought them and tried to get it, tried to win, and they actually won. And they forced Venue and surrender, and Venue and Disney to surrender and like basically win a huge battle for their shareholders. So this is the outlook going forward. The reason why I'm sharing this with you is because we want to kind of use these to value the company. So 2026, the outlook for the Newco is going to be a total target revenue of $6.5 billion to $7 billion, and target adjusted EBITDA of $325 to $375 million. So the EBITDA growth here is going to be pretty decent here, as you can see. And here's when you can kind of start to flatline when it comes to EBITDA growth and the top line growth. So this is probably the biggest concern for me personally, because like if the top line is not growing and EBITDA at one point is going to start to flatline as well, you have to be a little conservative. Again, I don't want to just like be the party popper here or whatever. I just want to share honest thoughts. If you're looking at the stock, how would you how would one think of the valuation and things, because it's very hard to value this company. So if you look at the valuation right now, let's just take a look at competitors and see how we can kind of value this company. Again, this is very subjective. It's based on the numbers, which are far forward looking. These numbers were actually released in January. We are in July, so these numbers projections might have gone up by then. So we are kind of relying on a number that might not even be accurate anymore. So we will give the valuation a little bit of a premium based on that. So Netflix revenue is $29 billion. EBITDA is $26 billion. They're profitable, right? So you have to give them a premium. I don't know if this premium is actually justified. I do think Netflix is a little overvalued. That's just my opinion. Everybody's entitled there. I don't think that Netflix does. I know it's a very great business, very strong business, but this premium as compared to all these other companies like Warner Bros, Paramount, and Comcast, like it's substantially higher. And I mean, I guess you have to pay for the growth because the revenue growth has been great, and there's a moat around Netflix, right? Obviously, but yeah, that's neither here or there. But like the revenue multiple is 10 times, EBITDA is 15 times, and all the other competitors like Walt Disney Company, obviously they have other streams of income and everything else, and that's why the EV to EBITDA multiple is higher. But most streaming companies trade at about 5 to 6 times EV to EBITDA, and about 0.68 to 1.59 times revenue. Comcast is 1.84%, median is 1.84. I think we have to reduce that number to 1 times because, again, as I said, they don't really have a library, so they are just just broadcasting from other people. So that kind of reduces the mode, that because you don't really have a library, right? So that you have to give that a discount. So the estimated 28 numbers, I have gone with the high end of this 7.5 billion. We can go higher even if you want, like, and that's where the valuation comes into, right? You have to kind of think about, well, what are the different scenarios that can play out, and how much what is the multiple that I'm willing to give, what do I think is going to happen in the future. So if you look at the revenue multiple, right, the estimated 2028 numbers are 7.5 billion for revenue. So we'll say estimated EV would be 7.5 billion, discounting that at 15% per year because it's 2028, right? So if you bring it back to 2026, current implied there'll be 5.2 billion, and the current implied market cap is 4.7 billion. So the upside right now is about 10% if we use the numbers that they have given. Now you can just plug in whatever numbers you want in here, and your implied upside will go up. I'm trying to be conservative again because it's not the best business to be in. Streaming is a very tough business, as we know from Fubo's operations for the last few years. You can give it a multiple, maybe like 10, 15, 20% based on what you think. I'm trying to come up with a baseline as to what I think where the stock should be, right? And then for EV to EBITDA, so as we can see here, most trade about at 6 times, median is at 6 times as well. I'm going at 10 times because I think that the growth is going to be there, and also this company is a high growth company as compared to all the other ones. Again, you can kind of pick and choose what you want, and I do think the EBITDA is going to come in higher than 550 million. That's just from my analysis, and I was kind of running some projections. I think we'll probably get to like $6.5 billion in $6.5 million. Sorry, this is $6.5 million in EBITDA. I do believe David Gensler is going to do a great job with this. He's been managing a very tight book at Fubo, so he knows how to manage costs. We've seen some like amazing cost cutting and revenue growth from Fubo, just with the backdrop that we've seen. And that's the other reason, like that's the premium that you want to give for that, because I mean, running a company like Fubo and having not it go bankrupt and like kind of striking this deal, winning that lawsuit, all those things, you could probably give that a valuation premium, just because how great this business has been operating in terms of survival. Honestly, the kind of backdrop they were going through to be able to get to this point is huge, honestly. So so estimated valuation according to 10 times EBITDA would be $6.5 billion. If you discount that at 15%, you get to $4.9 billion. The current implied market cap is $4.7 billion. So you might be asking how I got to $4.7 billion. So I just used the current market cap of $1.42 billion. And as we know, that Fubo is going to be 30% of the new entity. So once those shares get in, get added on, the current market, the market cap will go up to 4.7 billion because there'll be more shares added, right? Because you will have 70% more shares basically being added. So the fact that Fubo again was able to do it, they got more revenue out of it as well, right? Because they got 1/3 of the company roughly, but their revenue is almost 1/4 of what Hulu's is. So like 20% of the revenue, but 30% of the company, like pretty decent. Like this deal for shareholders at that time when it came out was, I mean, I was kind of blown away by how amazing this execution was, how they were able to get this done. We did, as I said, like in my tweet that I had mentioned, I had said that there's a good chance that they'll win, but this result this quickly was not expected. So let's look at the technical analysis real quick and see where the levels would be for me to get interested and where I'd be taking profits and everything else. So this is the VWAP from when the announcement was made. So VWAP is the volume weighted average price. You can see how the price has kind of been respecting these levels, and this is the flip of the VWAP, which is generally considered very bullish. This stock I believe is quite heavily manipulated, so technical levels maybe are not the most important levels, but this is nice to see that they're able to they're able to flip this, or I guess the stock is able to flip this VWAP. There's an inefficiency in this region around $4.8, $4.9. Also, there is a there's the first band of the VWAP, plus it's a psychological level as well at $5. I think we'll see a substantial amount of people jumping in here, and then $5.7 as well. Again, I wouldn't get too excited about where this company could go. I know there's a lot of people who would be thinking, well, it should be certain times revenue, like the revenue is going to be 7.5 billion, so might as well give them the Netflix multiple at 10 times, right? I would recommend going against that. Even if you do them, like even if you give them 2 times revenue, right, at median you get to 15 billion, which would mean a 3x from here. And if you do believe that that's fair, then I mean, yeah, it's great for you and you should hold it. I have substantially reduced my position, as I said in my tweet. I had a 3% position that I initiated. I had publicly shared when I added shares at 1.35, 1.21, I think also, and it ended up being 5% of my position at that time. The stock went up. I sold in pre-market a lot of my shares. I didn't spend the time, and it was like more impulsive. One of the mistakes that I made this year. But I still kept more than 60% of my position at that time. Sold a little bit as the stock approached the $6, $7, $8 when I got the chance to sit down and run these numbers. I still have 35% of my initial position, which I might be taking off if we get a big day tomorrow. As I shared, these will be levels I'll be interested. The absolute high level, which I think would be the blue sky scenario, which I'll be completely out at, would be the $9. This is the listing VWAP. So all the shares traded since the stock has started trading, since its IPO, everybody who's a holder, their average price right now is $9. This has been slowly going down, obviously, with more volume. But I think this will be the highest high that I could think they could come about in the next 5 to 6 months. So that'll be the blue sky scenario for me. I don't see it going across that $9 level again. Please, this is just my opinion. I might be wrong. You might have your own thoughts. So please don't come after me. I'm trying to be as honest as I possibly can. I don't want anyone to lose money by not knowing the facts. Again, I'm a shareholder myself, and I shared very publicly how much I love this company and how I think that there's decent upside in the stock. So I'm not someone who's a naysayer or anything else, but I do want to make it objective so that you guys know where to expect the stock, where to expect the stock to go, and where the profit taking might come in, and how the analysts are looking at it as well. Because I think I read something about from Wells Fargo, and Wells Fargo as well as a couple other analysts are also using the 10 times EBITDA multiple. So it's kind of important, right? Because if the market cap goes up to $5, $6, $7 billion, it's kind of hard to see that retail can move the stock at that point, right? It has to be institutions. So we have to know how institutions are valuing the company, what they're looking at, because that is just a psychological level that they are going to be taking profits at. And like Vanguard owns 9% of this company. I'm sure BlackRock has a huge percentage as well. So they'll be taking profits as soon as it starts to get a little overvalued. So that's something else to think about. So yeah, hopefully you like this video. Again, I'm sorry if this hurt your feelings. I'm just trying to be as honest as I possibly can. And I'll see you in the next one. Take care. Bye.